Hello everyone, welcome to the Ichimoku Charts.com daily analysis for the S&P 500 for Thursday, June 13th, 2013. Well, the continuation of the trend to the downside today. Today's candle in bar chart terms is an outside day, and that's where we have a bar that's made a higher high but also a lower low, and therefore doesn't change the trend to the downside. So the prior trend to this type of bar, it remains intact, and that was to the downside. Now, outside days in bar chart terms are days of indecision in the market, and that's because the buyers were strong enough to take out the previous high, but the sellers were also strong enough to take out the previous low. So we have this great battle going on between the buyers and sellers throughout the trading day, and it does suggest quite a bit more volatility than the previous day's trading. And it does suggest that neither side has been committed either to the upside or to the downside, and that's why it does suggest that there is potential for a change of trend. Now, with this candle, however, we have seen the buyers close with very strong control of this market, and for the previous day's trading the sellers had taken control and they maintained the control that they had on the previous day, but today they've lost all of that control and the buyers have closed the market up towards the high, suggesting that they have very strong control, and this does set the market up for that potential change of trend. A very large white body candle, very much larger than the previous day's trading, and it does suggest that the buyers have found some new upside momentum in answer to the previous day's 2 days trading, where the sellers had some strong downside momentum. So the buyers have made a substantial amount of net bullish progress on the day between the open and the close. Now, also in terms of the candlestick patterns, this is a potential bullish engulfing pattern, and here we have the prior downtrend in place, a previous black body candle, a white body candle today, where the body of this candle engulfs the body of the previous candle, and we also have the close up above the previous close here and very close to the previous high. That isn't the requirement of the bullish engulfing, but it does suggest that there is quite a strong amount of bullishness in this market. So what we're looking for here is confirmation of the pattern, and that would be a candle or a bar with a higher high and a higher low. So we are looking for the market to take out the high. Now, the only problem here for the market is that we have the Kijun-sen close by, and that may act as very strong resistance for this market, and that's around the 1642 level. And if we look back here at these previous levels here in this zone that I've mentioned quite often, standing in up to 1650, that has acted as a zone of previous support and then resistance, extending up to 1650. So the market has potential to find strong resistance in this area once again. A breakout, and a solid breakout up above the 1650 area, would give a lot more confidence in the potential for the market to trade back up to these highs around the 1687 level. But we can't preempt the market. We need to watch how the market reacts around these levels, extending up to 1650. Now, in terms of the Fibonacci ratios, and here with the Fibonacci Extension, we're examining the relationship of the current first time frame downtrend the market's in to the previous time the market was trending down. And here today we've seen strong upside price rejection from the 78.6% level. It does suggest there is a very, very strong possibility of a change of trend back to the upside. And in terms of the Fibonacci retracement, strong price rejection from the 78.6% level with a very solid bullish candle, suggesting potential for a change of trend to the upside. Now, in terms of trending action in a longer term time frame, if we look at this market, we are still in a second time frame downtrend, and that's based on the peaks and troughs. So we have a peak, a trough, a lower peak and a lower trough, and that established that second time frame downtrend. The market went on to complete a couple more lower peaks and troughs. Here we now have a higher peak, so that did raise some doubt about continuation of the trend to the downside. And now we have potentially a higher trough, and no confirmation of that yet. We will need establishment of a first time frame uptrend, but there is a good likelihood that that will be established. And if we establish that higher trough and then take out that peak at this point around the roughly around the 1650 level, which is that important level that I've mentioned, we have potential then for there to be a higher peak and higher trough, and for the character of this market to change substantially. So going from that second time frame downtrend to potentially that second time frame uptrend, and the market will have good potential to trade back up to around the 1687 level, and even perhaps test up to the 1700 level, but we need the establishment of that second time frame uptrend. Now, in terms of Ichimoku, a bullish market in the long-term time frame, with the market trading above the cloud, and we have been trading above the cloud for quite some time, so we maintain the bullish activity. The market has retraced back towards the cloud, finding equilibrium around the cloud in that long-term time frame, and now we see bullish activity coming into the market, and potential for the market to now trade back into disequilibrium away from the cloud and test up to the 1687 level. The fact that we're trading up above the cloud does give us a lot more confidence in establishment of that second time frame uptrend that I've already mentioned as well. In terms of the Kijun-sen, the pink line here, we are still trading down below there, so the market is bearish in the medium term time frame, but we are retracing back towards that flat Kijun-sen. It now becomes very important for this market. It has potential to act as resistance, so what we want to see is a bullish close up above there, and a bullish close, a strong bullish close, would give us a high probability buy signal with the Ichimoku indicators, and suggest strong potential for the market to trade to higher levels. In terms of the short-term time frame, we are now trading back up above the Tenkan-sen, and that does suggest that the market is finding some momentum in that short-term time frame and may break out up above the Kijun-sen. So a bullish close back up above there, so a bullish trend in the short-term time frame. The checkout span here is now back above the corresponding price action, so it's confirming what we're seeing in the long-term time frame and the short-term time frame, and we are now waiting for the market to potentially take out the area around the Kijun-sen and above. So we do need to be mindful of these areas of potential resistance overhead. Down below we do have very, very solid support around the 1600 level. Previously the market tested there as resistance and is now acting as support, so there is potential for it to act as support if the market does trade down. But it's more likely that the market will test to higher levels, and we do need to watch how we react in this zone extending up to 1650.